For today's news and views segment, I wanted to just discuss some high-level misconceptions about commercial mortgages. I may have spoken about these in other episodes that you've watched, but it's always a good refresher to be reminded of some of the things that you need to know. And so there's four or five things that you should know. And the first one that you should know is that interest rates generally are higher. One of the things that we hear from people are, well, my mortgage on my home is 2.89%. You mean I can't get a commercial mortgage for 2.89%? Generally speaking, the answer is no. The interest rate is set according to the bond market, and the bond market goes kind of up and down every day. And so when a bank quotes you an interest rate, they're going to quote it higher than what you would expect on a residential mortgage. So interest rates are higher on commercial mortgages. That's a common misconception. Second thing is, and this one's the frustrating one, but the time to close a commercial mortgage is also different than a residential mortgage. When you are purchasing a home and you have to close on the 15th of the month, the residential mortgage market is highly commoditized and pretty structured so that mortgages and deals can move very quickly. In the commercial mortgage world, there is no industry-wide system, there is no industry-wide structure. Every bank has a different process for how they will approve and fund a commercial mortgage. And so we tell borrowers, look, give yourself 12 weeks or 90 days reasonably from beginning to end to make sure that your commercial mortgage gets done. And a common misconception, of course, is, well, I have to buy the property, in 21 days or in 30 days. I was able to close on something like that when I bought my home. I can't do that with a building. The answer is no. So if time to close is longer, that's a common misconception. The level of due diligence and the costs associated with due diligence are greater. So an appraisal on a residential property could cost you a couple $100. An appraisal on a commercial property is going to cost you a couple $1,000. When you get a home inspection done on your house, again, a couple $100. You get it done on a building, thousands of dollars. As well, in addition to those sorts of costs, you might need an environmental report, you might need a mechanical report. The legal fees are going to be different, and so the costs associated with a commercial mortgage can be considerably higher than a residential mortgage. And so these misconceptions aren't a bad thing, but it's important for you to know those misconceptions that interest rates are higher, it takes longer to close, that due diligence, when a bank is going through your paperwork, it can be more expensive. That way you can set yourself up for success. So if you're considering purchasing a commercial property, either for your business or investment purposes, you can get lots of the answers that you're going to need at emilynow.ca. And if you choose, you can open a file on the portal as well, and we can give you some comments on your documents. We can help point you to the right lender. You're going to ultimately get a score, and that score gives you the probability of being approved, and we can also help you improve that score.